Our guest is a commodity watcher who says there are signs the world is inching towards a wartime economy when it comes to natural resources.
Oil holding gains as traders weigh geopolitical tensions from Venezuela to Russia and Iran against concerns.
What if the world wakes up one morning and oil is no longer king? What if energy markets flip faster than investors can react? 2026 is not just another year. It is a pressure test for the global energy system. Oil giants are nervous. New players are rising. And markets are preparing for shocks that most people are not ready for. Let us break down 5 powerful energy trends that could reshape global markets in 2026 and change how money flows forever. Trend 1. Oil demand stops growing. For decades, oil demand only moved in one direction, up. Now that story is cracking. Electric vehicles are expanding. Energy efficiency rules are tightening. China is no longer consuming oil at the speed it once did. Europe is cutting fossil fuel use aggressively. 2026 could be the year oil demand hits a ceiling. Not a crash, not yet, but a dangerous pause. When demand stops growing, prices become unstable. Investors hate uncertainty more than bad news. This is why oil markets may feel calm on the surface, but extremely fragile underneath. Trend 2. OPEC loses control. OPEC has always acted like the market referee, cutting supply when prices fall, increasing supply when prices rise. But that power is weakening. Non-OPEC producers are pumping more. Shale oil reacts faster than OPEC decisions. Political divisions inside OPEC are growing. In 2026, OPEC may struggle to defend prices. Every cut risks losing market share. Every increase risks crashing prices. This creates wild swings, sudden rallies, sudden drops. Perfect conditions for volatility-driven traders and a nightmare for long-term planners. Trend 3. Renewable energy becomes too cheap to ignore. Solar and wind are no longer just clean. They are cheap. In many regions, renewable energy now beats fossil fuels without subsidies. Storage technology is improving. Grid-scale batteries are spreading fast. By 2026, renewables stop being the future and become the default. This does not kill oil overnight, but it slowly drains demand from power generation and transport. Energy investors start asking a dangerous question. Why fund long-term oil projects when cleaner energy offers faster returns? Trend 4. Energy security shocks return. Geopolitics never left energy markets. It just went quiet for a while. Conflicts in key regions, shipping route risks, sanctions, cyber attacks on energy infrastructure. 2026 could bring sudden supply disruptions, not because oil is scarce, but because energy security is fragile. This creates short-term price spikes followed by sharp corrections. Traders love it. Consumers pay the price. Energy becomes less about supply and demand and more about power and politics. Trend 5. Investors rotate fast. Capital moves faster than oil tankers. Big funds are reducing fossil fuel exposure. Climate risk reporting is forcing transparency. Younger investors prefer clean energy narratives. By 2026, money rotation accelerates out of traditional oil stocks, into energy tech, storage, hydrogen, grid infrastructure. This does not mean oil companies disappear. It means only the strongest survive. Those that adapt thrive. Those that resist struggle. The oil and energy story is no longer simple. It is not about running out of oil. It is about running out of patience. Markets in 2026 will reward speed, flexibility, awareness. Those who understand these 5 trends early will not panic later. If this video made you think differently about oil and energy markets, hit like to support the channel, subscribe for more powerful market breakdowns, and share this with someone who still believes oil will rule forever.